Hello, everybody. My name is Daniel Young. I'm the owner and founder of Adaptive Perspective and the Adaptive Perspective social media platforms. There we go. And I'm back to give you an update about what we bought in June, or not June, in July. There we go. Um, yeah, I mean, so I just filmed the June video. I've got the July video. I've got some other videos I've got to work on. I'm just trying to get caught up on things. With the advent of school and me being back at campus, it certainly does cramp my time, and lately has made it pretty hard for me to make progress really anywhere for that matter. So I'm trying to use the time while I got it. So this is an unedited video. Who knows what you'll hear in the background as I film these in my house. I'm not a financial advisor. I am a strategist and a financial strategist, and I don't speak like the herd. I walk in limited company, and sometimes I walk alone. So we just bought for July, except we didn't buy in July. We timed our buy, and it's not like you can time the market. Far from it. But at the same time, we bought knowing that the market would fluctuate around tariff day 2.0. And it did. However, it didn't fluctuate as much as I thought it would. So tariff 2.0 started on 8/1 on Friday. My goal was to buy on Monday, but I had a lot of stuff to look into. Um, we were looking at a lot of different funds and a lot of different CLO, collateralized loan obligation funds. And I trimmed down the list significantly into this list. And I ended up picking the CLO fund that we're already invested in. The CLO market is incredibly tricky. And as Brett Owens and someone else said it recently, whoever's investing in the CLOs, whether it's him or me, it's a market space that very little people actually fully grasp and understand. And it's like a bond market, except you're buying a pack of bonds that are in tranches or just groups. And you want someone who has been in the space. You want somebody who knows what they're doing. You want somebody who has an insanely good track record, and you want somebody with you want the history of all of that. Like you want somebody who's had their skin in the game a long time. And as I started to look at all of those other funds, they're all very new. Some exceedingly new. Like Earn is new this year. So I wanted somebody with history. Um, I wanted somebody that, oh, so if I go back, so I want to say Carlyle lists themselves as uh, being experts in the CLO market, as does OCCI, as does XFLT. But when it comes to the closed-end fund world, OXLC has the longest track record of all of them. And if you want to deep dive on the history of OXLC, if you search for this URL, which I shortened because it was like half a page long when I tried to share it in here. There we go. So if you want to search for that URL, it's a really good deep dive on OXLC. And of one of the things I hope to build, my goal for creating a Substack is it looks like the best place to host files. So my goal would be to put all of this information on a Substack page and monetize it, to be quite honest, to charge a membership fee to have access to it, because I do compile a lot of data, and I do update the data. I update it for me, but I'm also willing to share it with you. But that way you could come on and it's got everything. I mean, you could see my portfolio and what we're buying, uh, where we are. So this is our Roth. The individual doesn't exist. It's just on here for the year. It'll drop off next year. But the individual became Fidelity, and this is our portfolio. It has everything but an account number for obvious reasons, because I show these videos on YouTube and elsewhere. Really, I show them on YouTube now once I create a Substack and get that rolling, they'll probably end up on Substack too. So it's got everything. And this spreadsheet communicates with this spreadsheet, which is why I want to make a how-to video of how I go about updating this spreadsheet and adding new funds to this spreadsheet and getting them to communicate. Um, Back to this one. Um, but yeah, so on CLOs, instead of investing in and over diversifying the CLO space, which is really tricky right now because there's a lot of uncertainty inside the space, I picked just one fund, except I bought a double portion. I had bought, I want to say I had bought OXLC three times before at 200, but since the price was so low at the time, I bought it. I bought a double part, and since then, I think it dropped to 3.2, and now it's climbing back up. So it's not like you're going to time the bottom of the market, and it's not like we were going to time the lowest point ever on Tariff Day 2.0. Tariff Day happened on Friday. With the fear push over the weekend, I figured Monday would be lower. I was hoping it would kind of coast into Tuesday and Wednesday and pick back up. And I'd have to go back and see. I think we bought on Wednesday. Let's see. We bought on A5, not much of a dip. 7. Yeah. So we bought on A5. I'll tag that. And it dipped a little bit, but it didn't stay down long. But at the same time, we still bought it somewhat in the trough. So ADX didn't make it because I looked at their ex-div date and it had already happened. So I didn't want to put money into a fund that I wouldn't see a dividend for 4 months. And then I went through and I checked everything and bought this list. And then I found out after when I was inputting the list that I messed up, quite honestly, on the ex-dividend date for these two funds. It's already happened. And I hate investing in something where I'm not going to get a dividend for a while. Now, these typically pay out dividends at the front of the month. So anything after that, you're not going to get a dividend for you're not getting a dividend for this month. You're not getting a dividend for next month because it's already happened. The ex-div date already happened. So it's like 2 months from now until you get the municipal bond dividend. That I can deal with. It's frustrating. But when you're buying in batch on the same day, it's hard to time everything. But I found out after that USA and ASG have already had their ex-div date for September, so the next dividend won't be till January, and that's frustrating. And I thought about selling them. I mean, currently we're break even on price. USA is up 2 cents, ASG is down 2 cents. We're break even on price. We could sell them, hold the money till the next buy, have more money at the next buy. But with the stock market and where I hope things are going, if even if the Fed doesn't cut rates, the market should be in a better position next month. So the goal would be that both of those are worth more next month, which sets up a better dividend in January to have the market perform better leading up to January. And ASG has a history of paying special dividends. That special dividend would be the most likely to hit in January. Their ex-dividend date, I think, is in November, which is the same as ADX's. So I mean, we could sell them whenever. It's not like we're going to miss a dividend. And just buy them later. But we might have also bought them low to have them go up higher. So it's kind of a coin's toss now. I think we're stuck now. Long term, I think they're great buys. It's just I hate missing dividend payments, and I hate waiting for dividends. I'm a monthly guy. I'll buy quarterly stuff when there's not a great monthly option, and I'll buy the best thing for the time. At the same time, quarterly is just not my style. We bought what else? All right, so we bought CLOs, which is kind of like a bond proxy. We bought USA focused blue chip funds, which I think will be great long term. And in the coming market, we bought real estate. We bought a monthly we bought a monthly fund that is just focused on 5G. It's focused on tech. There we go. But it's also just focused on 5G. And same thing, by having all of this information inside an accessible file on Substack, because I can't share files on YouTube. It's really hard to share files on Facebook and control access. Uh, Substack looks like a good option, but then I can put this on Substack, and every month, or say every week when it gets updated, it'll post every week, and then every month you'll have the buy suggestions, and so, or at least the buy recommendations based on what I'm looking at. Um, yeah, but then you get access to everything. Uh, so we bought 5G tech, but also just tech overall, and then we bought municipal bonds. Now going forward, I don't know if I'll buy more because the discounts are getting interesting, and there's debate on where municipal bond pricing and rates will go following a Fed cut. Just in the longer bond market, I don't think I think there's still great buys, especially when the dividends widen, or not when the discount widens. Um, but if the discounts continue to close, then they're going to go on a hold list. Uh, so what's next for us? I mean, in theory, we would buy at the end of September, but we'll see how the market goes. I mean, quite honestly, we'll see how the market goes. I'm going to make a video that I'm going to hope to put in Substack when I get that up and running. But I am going to make a video on how I input data into this one and how it communicates with the other one. Because I have not added ASG or USA yet into this portfolio because I'm unsure. I was uncertain at the time of keeping versus selling, and I'm leaning more towards keep because as much as I goofed and bought them after after the ex-dividend date, I think buying them now is still a better option than buying them later when they're more expensive. So we'll see how that plays out, or we'll see how that rationale works out. Um, but they do give me an opportunity since I hadn't loaded them. I can build out the spreadsheet, add them in, add them to the dividend spreadsheet, and then show how it all communicates and works. And then when it's ready, I can load that into Substack and have that ready for y'all. So um, yeah, I think that's about it. So if you've got questions about what we bought, if you've got comments about what we bought, um, if you're, I've had some people express interest in having access to all of this stuff. So if that's you, by all means, leave me a comment. And then if you would help me hack YouTube and get the word out that there is a better way to invest than the traditional single stock 60/40 4% rule way, that you can clobber the market and just outpace the herd with closed-end funds and 8% dividends. And it's not really a bifurcated strategy or a set strategy of 60/40. It's you're buying the current market with a long-term game plan so that you're buying stuff cheap now, knowing, right, like the market is a roll of the dice, but at the same time, you're buying with a strategy where you're scooping the deals of the present for a long-term perspective. And ideally, whether you're building a no withdrawal portfolio, like you're not selling your principal, or you're doing that, but you're swinging your returns forward. So fine, you sell something, but you're swinging that into another investment. So we're building a no withdrawal portfolio that will either supplement our retirement or fund our retirement. And I get it; it's in its infancy, but at the same time, I'm not retired yet. So if you like my content, consider subscribing. Help me hack YouTube and push the videos out so that more people hear of a better way to invest. And you can help me with liking the video, subscribing to my channel, and then sharing the video with other people. So best way to find me right now with everything in flux is just commenting on videos. And once I have Substack up and running and where I want it, and built out to where I want it, I will let y'all know. But I'll keep you posted on that. So I hope you have a great day. Wish you a great week. Hope you have success this week and you make progress, whatever you're working on. So I will see y'all on another video. Bye bye.